Hey guys, this is Richard Williams Jr. Good morning, guys. This is Richard Williams Jr. of Prophets of Forex here again with another video for you guys. I know that we recorded a couple of moving average strategy videos, and I said I wanted to go over what moving averages are. So today in this video, I want to share with you, just a little bit of knowledge on moving averages, how to use the market, what they are. This going to be a little bit more of an informational video than anything else. Before we get started though, like, subscribe, hit the notification button, guys. Comment in the comment section below, join the conversation, add to the value here on this channel as well. Thanks for the support as well. Support this channel, helping it being recommended a lot more to other traders like yourself through YouTube. Definitely appreciate the help that you guys are supporting and showing now. Go over to Facebook, follow over there as well. Go to our group and ask for a free invite to the group over there. Join the conversation offline over there as well. With that being said, we're going to jump right into the conversation. So we did a single moving average strategy video, and we did our double moving average strategy using the moving average crossover in our previous video. Today I wanted to go over what moving averages are. Now for some, we call them MAs, or depending on what moving average you're using, there's a different terminology, but moving averages are basically, they're the average or price of a currency or stock. So moving averages are used in stocks, futures, any market, on the Dow, all those big markets, gold, in currency, metal. You can use moving averages pretty much anywhere. And they basically just average out the price based on the period of time that's placed on them. Moving averages, they're really good because they help you to identify the near term or the short term trend changes in the market, right? So basically, a rising moving averages would basically indicate that price itself is rising or being marked up. There's an uptrend. There's a lot of bullish momentum and perspective in the market, right? And the verse side of that is that a descending or a moving average that's moving downward would basically indicate that there's a strong interest in the market price being pushed down, right? A strong interest in price being marked down, there being a bearish trend. The market value in the market is bearish, all that. So moving averages are a good way to help your mind see what's going on in the market. They are what they consider lagging indicators, so the data that's outputted is a little behind. So sometimes you might spot something before the indicator does, but they're good to use in your trading strategy. Like I said, a lot of professional traders use these moving averages in their strategies, and for a while I did as well, because they help. It doesn't say that they're not. It just helps give you a lot more confirmation in the market when you're using a moving average, right? So there are different types of moving averages as well. There's three types of moving averages. There's the SMA, simple moving average, and then there's the EMA, the exponential moving average, and there's another SMA, which is a smooth moving average, right? And a smooth moving average is basically the same as an exponential moving average, but it's just a longer period applied to that moving average. All right. So basically the period of time is based on what period you changed in the moving average, which I'm going to show you here on the screen in a minute. It basically goes back over the period of time of candles in which you indicate on the moving average, right? Now, the most popular ones that are usually used in Forex, because we're in the Forex market, are usually the 10, the 20, the 50, the 100, and the 200, which a lot of day traders or entry day traders use the higher ones to indicate the market interest on a higher time frame, like the 100 EMA or 50 EMA, a 200 EMA, right? These are used in all kinds of time frames: 5 minute, 1 minute, doesn't matter, 15 minute, 3 hour chart. Moving averages can be very helpful in your trading if you know how to use them and what they're used for. And basically that's what this video is about, informing you about what they are and how they can be used. They can be used to identify short-term trends, right? They could be used to give you a curve and an edge on when the market is starting to turn. Like I said, once again, they are lagging indicators, which means that the information that's outputted to you is going to be a little behind, right? But it'll give you a little bit more of assurance as you're starting out. Or if you're, looking to incorporate this into your trading strategy and want to understand more about moving averages, this will help you. This is just to better your trading. Now, it depends on who it is, but if you're talking about SMA versus the EMA, usually the exponential moving average, or the EMA, is used more widely by most traders for their day trading strategies, right? Like I said, I use that a lot more versus a simple moving average or smooth moving average. I use the exponential a lot more than that. If I was to, in the past I have. I don't use moving averages now, but what I'm saying is that they come in handy and they're used in every popular strategy out there. So if you want to incorporate them, it's a good place to start, right? So let's go and put a moving average onto our screen. Let's do that, guys. So we can go through some of the, that's an exponential. I'll add an exponential, and then I'll go back and add a simple so you can see it. So this is our exponential moving average, right? This is the EMA. Right now it's on the period 9. Basically, this is going back 9 candles to calculate and to average out price over the 9-10 candles at the close of those candles. If I wanted to go back further, I can just go to 20, right? And then I press this and just see how it got smoother, because now it goes back 20 candles of price at the close of price, and it gives me the average price. That way you see price flowing, congruently upward, flowing very smoothly upward. This helps tighten it out and bring out where price may be a little choppy and stuff like that. Like I said, you got the 10, you have that's how the 10 will look right there. That's how, I'm going to just go through all of them so you can get an idea of what they are. This is the 50, right? Look at the 50. The 50 is a little bit more tighter. You see a little bit more space between the market and the 50, which is a good. I know a lot of people use the 50 by itself. You can actually use that versus the 20. And in the video that I shared with you guys, we use the 20 moving average, but you can use the 50 moving average as well. That'll help heighten that simple moving average strategy as well. You can use, like I said, we got the 200. Should have went to 100 because 100 comes before 200, guys. And look, that's the 100, and this is usually used to indicate what the market value is over time. This is off the daily anyway, right? So this is what we're looking at right here. Price is below this moving average, so that's indicating to us that this market is bearish, right? Very bearish. It's used a lot on these bigger time frames because it helps you to see where the market really is on the long-term view of the currency. And this is IDCHF, right? So the long-term view, IDCHF at the moment, when it was below this line, was bearish, and it went above this line right now. Depending on if it closes below and continues down, then it'll go back bearish. But it was bullish for a moment. It comes in handy because, why do I do that? I go here. Because you can really use moving averages to help advance your trading. See, this is the 200. It becomes a lot smoother. The 200 is. Look, and there you go. See, off the 200, this is actually a bearish move back down. It didn't come above that. It came above and came back down. And like I said, then you have your different moving averages. This is the EMA. We can go and I can hide that. I can add. That's simple, right? Simple moving average. There we go. Simple. No. Why is that? Let's go back here. Should go moving averages. Where is it? See, there we go. We got a smooth moving average. You got your different moving averages in here, weight and exponential. I was looking for a simple, guys, so we can do that. So let's see. We're looking for a simple moving average. This is simple moving averages. I wanted to show you the difference between it, but let's see what this indicator looks like. This is too much. This is too much. But well, this indicator has all of them. That's why too. We don't need all of them at all. You do not need all of these. So what I'll do is I'm gonna take a lot of these off, so we can just use the indicator to kind of give you guys an idea of what it would look like. Everything else doesn't matter, right? There's still another moving average, which I think I just took that one off. Hold on. Where are we at? Okay. Yeah, we don't need that. Right? So this is pretty much what a simple moving average would look like. I think this is what the 9 period is. Basically, the simple moving average is really a little bit more tighter to price than the exponential moving average. I wanted to let you see a little bit what it might look like. You know, this is the only way I could find it because of the indicator. I'll take that off now. But basically, that's what you want to do. You want to use moving averages to enhance and to evolve your trading strategy. I wanted to give you guys an understanding of what moving averages are, what they can be used for, where they can be used. They can be used in pretty much any commodity, any currency, gold, the Dow, Forex, stocks, futures, options. They use them everywhere. So that this can give you a better understanding of when you see even the videos that I may put out, we put out here at Profits of Forex about moving averages and strategies, understanding what they do and where you can really use them. It helps you better be more equipped of how to use them. I mean, in your everyday strategies, even from following them, you know, what your strategy are or entry points and stuff like that. It's very important to have as much knowledge as possible so you can make a better informed decision, as well as using them in your strategy. All right, guys. So I hope that this has helped you guys, and benefit you guys and give you a clear understanding of what moving averages are, how to use them. The SMA versus the EMA the EMA is widely more used in the market, and that's in any market, for day trading. It's the most popular one. Then you have the 10, the 20, and the 50, the 100, and the 200 are the most used. So with this understanding now that you can kind of start to incorporate these things into your own trading, which ones you would like to use, what period would be better, how prices inputted out through the moving averages over the period of time and the closes of candles, and how you can set that up for yourself. If you want me to go in depth even more, just let me know in the comment section below. Like, subscribe if you're just tuning in, and follow the channel. Hit the notification button, comment in the comment section below. Go over to Facebook, request to join the free Facebook group over there, guys. Join the conversation offline. And with that being said, I'll leave links to the strategy videos in the comment section below. And I look forward to talking to you guys in the next video. This is Richard Williams Jr. from Profits of Forex, where trading is simplified.